Hi, welcome to another episode of the Financial Freedom Podcast. I'm Steve Richardson, a bankruptcy attorney trying to keep people on their path to financial stability and independence through education. Achieving financial freedom and meeting long term savings goals like retirement can seem beyond reach. This is often because the concepts of personal finance and investing can seem mystifying, or that myths out there have you thinking that these goals are beyond reach. Misty Lynch, a certified financial planner, has been helping people demystify the process and bust the myths that may be holding them back. Once I heard about her, I knew I had to have her on the show. Here's our discussion. My guest today is Misty Lynch, a certified financial planner, personal finance expert, and the owner and CEO of Soundview Financial Advisors. Misty hosts the unscripted reality show Heartbroke and the Demystifying Money podcast. She is also the author of the Demystifying Money book and a personal finance expert and resource for media outlets including the New York Times, Cosmopolitan, CNBC, CNN, Investopedia, Real Simple, Student Loan Hero, and many others. Investopedia named her one of the top 100 financial advisors in 2021, and U.S. News and World Report called her one of the 9 women in finance to follow because sometimes you need life advice, not just financial advice. When she isn't working, you can find her reading mysteries, skiing on the East Coast, or coaching your kids' basketball and field hockey teams. Welcome to the show, Misty.
And thank you. I'm glad you caught me in between seasons. Field hockey just ended and basketball in a couple weeks. So glad to join you today.
Well, if you're a basketball player, I hear an opening was just created in the WNBA.
Oh gosh, no, I
Maybe
went to
this is your
UConn.
chance.
Yeah, I went to UConn. Unfortunately, didn't make the team there. You can't see on a podcast, but I'm about 5'2", but big
Oh,
fan,
okay.
big
Not quite as tall as Caitlin Clark, then.
fan.
All right.
No. So
But that's great. So, what in my introduction, we talked about not only your podcast, but I don't think I've ever had a guest on my show that had an unscripted reality show.
mhm.
Why don't you tell me
Yeah.
about that? What's all that about?
Yeah, so this was interesting, and this was one of those things that happened during 2020 when we were all kind of locked up in our houses working. And I a friend of mine who I used to work with in corporate saw an Instagram post said they were looking for um, a financial person and a therapist to work on an unscripted reality show. And my friend Emily had flipped it to me and said, I think they're looking for you. And so I'd had a life coaching certification. I've been a CFP since 2011. So I sent a message to this random producer saying, like, hi, like I'm interested in learning more. After a couple Zoom interviews, I ended up flying out to California to work on a show called Heartbroke that Million Stories Media and the Singleton Foundation had put out. Their goal was to try to use entertainment and financial literacy to get people to pay more attention to these things. It's a The Singleton Foundation is amazing, and Million Stories is very interesting. And so I ended up working with 10 couples on that were having different, coming from all different, walks of life as far as how they were financially, their upbringing, all those things, and how it was impacting their relationship. So it was it was an interesting time. Reality TV had been, it was out on YouTube. It's still available, and it was such a fun experience just to kind of see how similar somebody, if you watch that show, you'll relate to one of the people on it, whether you're the ones that has to watch every dollar that you make and where it's going, if you're somebody who doesn't like to look at these things at all. And we had military families, we had somebody who had been homeless for a time, we had all sorts of different people. But it's interesting because we all worry about money. Not too many people feel great about it,
Mhm.
but we all have to deal with it every day. So it was a really unique experience. I really did enjoy that show, but it was a challenge. But it was a lot of fun.
Well, you're talking about it pairing up with a therapist. Were these couples that were mainly on the show? I
They
mean,
were all couples. Some were married, some were newly dating, some were had children, some didn't. And they ended up just using me. They ended up not going with a financial, advisor and a therapist. They ended up just having me take on both hats for that show. So it was
well,
interesting.
certainly financial stress can often lead to divorce and problems and everything else. And I guess when you with a title of Heartbroke,
Yeah.
which is an interesting
Hmm.
mashup of those two concepts.
Yeah.
That sounded interesting. So yeah, it is, one of the episodes of my podcast in the catalog is getting your money ready for marriage
Hmm.
and having that talk. My wife and I, when we were engaged, sat down and compared our books and figured out, what our budgeting was, what our income was, what we could afford. And we went into it financially with our eyes wide open. And
And I think that's
fortunately,
something that a lot of people don't do. They don't think it's romantic to talk about these things. And some of these couples didn't even know how much each person made or had. And then the fights would start and it would, eventually they'd blame money, but a lot of time it was really communication. So I think, like you said, going into it, kind of talking, being on the same page with your wife, you could accomplish so much more
yeah, you have
when
a
you're on
better
the same.
idea of if you have
Yeah.
conflicting mindsets about money,
Yeah.
that can cause problems.
Right.
And talking it out before you get married can help you to try and get some ideas on how to deal with it. If one of you has an abundant mindset and the other one
Mhm.
has scarcity mindset, trying to figure out how to reconcile those two before
Yeah.
you get married can make things a lot easier.
Yeah, and I think a lot of people, I mean, everybody has a different money mindset. My sister and I have very different money mindsets. We were raised in the exact same home, So
Yeah.
I think it's understanding how your partner feels and why, not necessarily meaning they need to change because yours is right, because none of us are exactly right when it comes to how we think and feel about money. It's just a matter of understanding each other, where they're coming from and the differences so that you can, find success and, move on with the relationship, kind of understanding how someone might feel in
Mhm.
different situations.
And having a full understanding of money really and how it works and what they need to do
Yeah.
and things like that. And with your approach to your book, Demystifying
Mhm.
Money, I think there's a lot of mystique to personal finance or just financing and investment in general and things like that that have people either afraid to
Mhm.
get involved in it or just don't think they can or misunderstand a lot of things.
Mhm.
So, there are a lot of myths out there
Mhm.
about money. And as I was joking with you before we hit record, what we're really doing is demystifying money
Yes.
by busting a lot of myths.
Mhm.
So I wanted to talk to you about some of those myths.
Sure.
And the first one was kind of surprising when we put together this list. I'm a bankruptcy attorney, and with a lot of shows that I've done with guests and talks and everything, say, well, if you really want to get on to financial freedom, start investing long term for retirement or the education of your children, whatever, you need to get rid of your debt,
Mhm.
pay off your debt. And you see the idea that debt is bad as a myth and that
I
that's
do.
not true. Why is debt good, or when can debt be good?
Yeah. So my thought is, and a lot of people who have debt or have come out of debt or are dealing with it now, think of it as them being bad. Like they made a bad decision and they're bad. And I think debt is neutral. Debt is using money for something, using future money today. And
Mhm.
so there's a lot of times where a lot of people use debt to fund their businesses, to buy homes. There's debt, there's Honestly, I put my CFP certification on a credit card, a pretty high interest credit card, because that was the way I could access money at that time in my life. Now, somebody could look at that and say that is a bad decision. That is bad debt. That's credit card debt. That's terrible. But with the options available to me, I did not have a wealthy family. I did not have any the savings or anything like that, but I knew what I wanted to do. So I used debt as a tool. I
Mhm.
paid it off eventually, but it was one of those things that you can look at it as being neutral. Even if you have a certain number, you could like write down you have $20,000 in debt, 50,000. Okay, now what do you want to do about it? But
Mhm.
you have the choice of what you want to make that mean about you. And if you think that it makes you a lousy person or bad with money, you're going to keep proving yourself right by continuing to make worse decisions or things like that. So I feel like that whole concept of it being bad is just humanizing something that just really is what it is. Now maybe it's what you needed to do at the time to get by because you didn't have the money. And maybe you want to change how you use it. That could be done too. But I think assuming that it's bad sometimes leads people to continue to think, well, then I'm just bad with money, period.
Mhm.
Which becomes a self-fulfilling prophecy.
Well, obviously there's a difference between good debt and bad debt.
Sure.
And I guess the general litmus test is whether it is manageable or affordable debt.
Right.
You don't
Yeah.
take out a loan that you can't afford the payment.
Right. Yeah.
But
No,
can
that's
you
true.
give us a little bit of an idea for the listeners of saying, look, if they're afraid of debt, what are sort of the
Yeah.
indicators that it's okay? This is good
Yeah.
debt. You don't have to worry about it.
Yeah, and I think there's a lot of things that we might need debt for, things that are expensive, like real estate, education now at this point. And I think that sometimes we can look at debt in a way to say, okay, like what are even now, like when I got a car years ago, the interest rates were extremely low and now they've gotten quite a bit higher. What it's really just looking at the numbers, doing the math. What is it that you want? Can you afford it? Like is it going to be a good use of your money or not, or is it something that you need? The interest rates and if you can afford the payments. So if you go into things knowing that you're not going to be able to pay it off, that's not a good idea. We want to make sure that you're not doing that. But if you can figure out this is the way to get, to accomplish a goal, whether it's buying a home or something like that, and you can, get the math and fit it into your budget and figure it out, then I think that it's not necessarily all bad, even if it's a high interest rate or it's something like that. But if you could figure out a way to make it work and it really does, if it does serve a purpose, it's not just because I deserve it or I had a lousy day, so I'm just going to
Right.
keep using my credit card. It can be something that can fit into your financial picture and help you get certain things that you want faster.
Hmm. Well, it's certainly if you're dealing with a mortgage or a car loan
Mhm.
where the truth in lending laws require the lender to say, okay, this is how much you're borrowing,
Mhm.
this is how much the interest rate is, this is how much your monthly payment is going to be. And that makes it a lot easier for that type of debt to know that you can afford it because you're looking at the numbers, say, okay, I can fit that into my budget.
Mhm.
But there are a couple of areas of debt that I think need a couple of additional
Mhm.
steps or go a little bit further to make that determination.
Yeah.
The first one is credit card debt
Mhm.
because it's rotating debt. It's not a fixed amount that you borrow and then pay back, and the interest rates are a lot higher. So what my wife and I do is we use the credit card not as a way of financing things,
Mhm.
but as a way of paying for things conveniently.
Yeah.
So we know from our budget that the items that we place on the credit card are expenses that are within the budget. If we're making larger purchases, we make the determination of where's this money coming from that's going to pay the bill. So when that bill comes, you can pay it off. And
Mhm.
by continuing you're incurring debt, paying it off, and never carrying a balance, then
Yeah.
you're going to be okay.
Yeah.
And being able to do that consistently helps with your credit score.
Mhm.
And a good credit score can lead to a lot of good things in life.
Absolutely.
So good debt and manageable debt like credit cards
Mhm.
can help you with your credit score.
Yeah.
The other one is student loans.
Mhm.
And that's a problem. And no matter how responsible you are, per se, it can be difficult. Because, for example, if you go to a 4-year college and you borrow $10,000 in your freshman year, say, by the time the interest accrues on that $10,000 over your 4-year career, you're going to owe a lot more when you graduate than what you originally borrowed. And to say, well, this is how much you borrowed, this is the interest rate, this is the monthly payment, that goes out the window because of the interest accrual and capitalization. And if you go on to graduate school, it can
Mhm.
be even worse. And maybe either make interest only payments while you're in school, or talk to the loan officer and say, all right, if I borrow $10,000 now at this interest rate, uh, work it out for me. When I graduate in 4 years, what's the balance going to be and what's the monthly payment going to be? Because it
Yeah.
seems to me you ought to be able to make that calculation. So you have to keep that in mind and make
Right.
sure before you incur it that you can afford the payment,
Right.
right?
Yeah, and I think that that student loan debt, if I had to rank the ones that I like to pay off faster, typically student loan debt is right up there, the first one. And I do think it's just a matter of I have talked to people that feel like that expense is as a reflection of themselves and their bad choices, which they may have made at 17, 18 years old. And so it's just, again, it's that one, I think there's certain predatory lending and things like that that is certainly worth looking out for. It's just a matter of like, yes, looking at those numbers, figuring out like, hey, how am I going to tackle this? And then eventually, like you said, use it wisely. Where if it's in your budget, this is just a very convenient and safer way to pay for things.
Yeah.
While thinking about, that necessarily that decision or going into debt is not a reflection of your whole financial life.
Right. So debt could be good if it gets you an asset like a car or a house,
Mhm.
if it helps you with your credit score because are able to afford the bill
Mhm.
and to pay it back consistently every month. So that can be good debt. So
Yeah.
let's talk about sort of building wealth and sort of
Mhm.
long-term financial goals, and this myth that you need a lot of money in order to build wealth. The old "it takes money to make money."
Mhm.
Uh, what do you say to people who think, oh, I don't have the money to invest in the
Yeah.
stock market. I'm never going to get anywhere. I'm never going to,
Mhm.
build wealth. What do you say to folks like that who have that myth stuck in
Yeah.
their mind that holds them back?
Yeah, I think a lot of people, this could be coming from where this is a lot of times depends on how you were brought up and things like that. But there's sometimes when people just be like, that's not for me, that's for them. We like to, in our brains, be like, okay, this is who we are. We aren't investors. And there's a lot of people who don't in America invest in the stock market or have any money saved. But I think it's interesting that, like, there's never been more access to building wealth than there is today for people to invest with smaller dollars, smaller accounts, to be able to start something, even if it isn't, even if it's relatively low or flexible, each week you can start to put stuff away. Where before, maybe you would need a stockbroker, you would need a person who could help you do this, or a lot of wealth to even be able to get into this system. And so I think that that's something that a lot of people feel like they're going to need X amount of dollars before they can even consider it. And that's just not necessarily true anymore. Most people, if if your first employer, might say we have this, 401k plan at work that you could start to participate in with a percentage. And a lot of very ordinary people with very ordinary jobs have built a lot of wealth just by putting a percentage of their money away. It sounds very basic, but it is one of those just universal truths that if you start putting away a little piece of everything that you make, eventually you'll be able to support yourself financially without having to work.
Mhm. Well, certainly in the last few decades, the landscape has changed,
Yeah.
and whereas, when I was, growing up in
Mhm.
the '60s and everything, or before that,
Mhm.
if you're in the stock market, you're buying individual
Yeah.
stocks, or you
Mhm.
have to, and if that's the case, you need a stockbroker
Mhm.
because you just can't go out and buy a
Do it.
stock. It had to be purchased through the market, and even with funds and things, there were usually minimum investments,
Mhm.
and if you didn't have that minimum amount of money, you couldn't get in. So it really was kind of it takes
It was
money to
very
make money.
exclusive. Yeah, absolutely.
But now you have a lot of discount firms. You have places like Vanguard or Schwab, and index funds or
Yeah.
mutual funds where you don't have to buy an individual stock. You don't
Correct.
have to do the research to find
Mhm.
out, is this a good company? Should I invest in it? Am I going to make money? Is it going to grow? Am I going to lose money?
Mhm.
The risk is spread out over sometimes hundreds, even of thousands of stocks, depending upon the fund that you get, that can
Mhm.
make it a lot easier to start squirreling money away.
Mhm. Yeah, you can automate it now. I mean, there's so many things that you can do. And I think that it's the participation is the whole point. If you spend years saying it's not for me, that time that you've lost, you could have been, slowly accumulating wealth and investing, like you said. So I do think that that's something that a lot of times, and maybe we heard that from our parents or grandparents, but also maybe they didn't have to fund their own retirement the way that we all have to. So I think a lot of us don't really necessarily have much of a choice anymore unless we want to depend on the government or our children or other people to support us. So really, I think it is okay if we have to start small, let's just make sure that we start.
Right, exactly. and it's a lot easier. And the whole idea of paying yourself first, as you say, you can just have an automatic deduction
Yeah.
from either your pay or from your bank account, and it's sort of out of sight, out of mind. That money's already gone, and you're planning your finances on what's left, and you're quietly putting away money long term.
Mhm.
So, all right, so it's not, everybody can be in the stock market or everybody can invest and save using equities or bonds or all sorts of investment
Mhm.
vehicles to for the long term saving, either for like retirement or the education of their children. Uh, one thing's happening now with one area, and that's real estate. And I think that a lot of the Gen Zers and some of the millennials, they're not looking to be homeowners. They're
Mhm.
more looking to rent.
Yeah.
And this myth, and maybe they're seeing that this myth that buying is better than renting, and maybe they're onto something here.
Yeah.
So, is buying necessarily better than renting, or is it the other way around? And why?
Yeah, no, and I think that this is definitely one of those myths that I hear that people say like it's true. Like owning is better than renting, like period. Like, and they, and I think there's a lot of ways, there's a lot of times, like for me, I wanted to own a home before I was 30. I grew up living in different apartments, moving around a lot. Financially, it was very unstable. And I wanted a home. I wanted to be able to do whatever I wanted on the wall, all the things. And so for me, it was very important. But also, when I first moved to Boston, I was in renting a place in Brookline, Massachusetts, which was a wonderful place to live, but completely out of my price range. So if I wanted to live close to work, enjoy my 20s, and I chose to rent for those years. And that was not a mistake at all because I liked living there. And I think there's a lot of people who maybe enjoy living in cities that have become very, very difficult to buy in. So I know some people that have made sacrifices and said, okay, fine, I want to live close here, but I'll move, you know, an hour or 2 hours out so that I could own something. But then they are unhappy with what they bought or the maintenance costs or all the things that come with being a homeowner that are really weighing them down financially. And also, it was just because they wanted to buy something so bad, and I think that the whole landscape is changing as far as real estate. A lot of people who got those low interest rates are not moving around. And so at least what I'm seeing in New England, the available properties to buy might not be ideal. And so I do think for some people who feel terrible about their decision to rent because they think that they should be owning something or they're paying somebody else's mortgage or throwing money away, I think that that's definitely not necessarily true. And I think there's a lot of people who are very happy renting because they don't want to deal with certain things that come along with owning a property, or they want to live in a location that maybe they're priced out of.
So, like debt we were talking about, I mean, it's not that renting is always better than buying,
No, of
and
course not.
or that people should think that if they have a home, they have to buy a home.
Mhm.
But just like we talked about earlier with debt, what would you say, in people thinking about should I buy or should I rent? What factors should they consider, and how could you help them along that decision process?
Yeah, I think a lot of times when I talk to people who are like, I want to buy something because I have this money sitting here and I've got it 5 offers rejected, and they start to get it's competitive and frustrating. A lot of times you want to make sure that you know where you want to be for a while. If you don't know where you want to be in the next 3 years, 2 years, 5 years, owning a home might not be the right decision for you. Just because right now you've been able, people have been able to sell homes quickly. That's not always the case.
Mhm.
And also, you might not have a lot of equity in the house where you're not necessarily going to make a profit just, by buying a home quickly and selling it if you needed to leave. Also, I think a lot of people are watching a lot of reality shows about home maintenance and flipping and all of these things where if you aren't a handy person and you are looking at these houses thinking how hard can it be, I can just make this work. There's a lot of money that goes into, if you do buy a home that does, need repairs or has water damage, all of these things. So I think you have to kind of assess your own ability to take care of a home because there's no landlord to call. there's nobody who can come and help you. So I think, yeah, if you're really, and then if you know where you want to live, if a school district is going to matter or not, what your commute is going to be like. I think there's a lot of things that people can do to make sure they're really ready. Like I remember before I bought a house, I remember driving through the neighborhood at night, doing certain things to see, like, do I see myself here for a long time? Because you might not necessarily be able to just change your mind the way you could if you rented an apartment that wasn't a good fit.
Right. So, to a great extent, I mean, uh, are you going to be in one place for a while, or are you going to move around? My wife's father was a Dow Jones executive, and they moved him around the country, and for whatever reason, he rented initially, but I think at some point he bought, and he was out and they were living out in California, and he was building a deck on the back of the house. And one Sunday, he just put the last deck screw in, and the phone rang, and it was work. They needed him in Illinois the next week.
Yeah.
So, yeah, he moved and said, I am not building another deck.
Yeah. No, I think that that's definitely something, and I don't see myself moving for quite a while, but I do think that, some people like to move around. Some people have jobs where they do. And if you're at that executive level and you're buying a property and you'll be able to make money on it, then or you get help with moving it. But otherwise, moving can be very expensive. And if you're moving for work, sometimes work can help you with those things. But for a lot of people, if it's just an opportunity that you want and it's not exactly where you live, and location's important, yeah, it can be kind of you can kind of ground yourself when you have a property that you need to take care of.
And that picture has really changed in the last few years because, as you say, well, do you work in an area that has where real estate prices are so high that you can't afford, or just the cost of living in that area is too much, and if you tried to buy, there'd be too long a commute. But now with telecommuting and work from home that we
Yeah.
have now and virtual employment, you that can come into play and say, well, I may get a different job and maybe a different job in a different part of the country, but I don't necessarily have to move.
Yeah.
And maybe I
No.
can plant down roots wherever I am now.
Yeah, and that is widening things up. But I think that a lot of times we are seeing some companies pull people back in, and a lot of people probably did buy a property quite, and now they have to decide, do I want to work here anymore, or what am I going to do? But also, yeah, I think that, sometimes people will say, okay, we'll just move to move to a lower cost of living area, especially to people in New England, go move out to the Midwest or somewhere different. But you might not have family there. You might not have a network there other than work, which would add to, stress and other things. So there's a lot of reasons why some people might like to rent or be, where they are, because not just because, financially they could potentially own something, but, you have to look at all those different things when you make those choices.
Absolutely. And the next myth to talk about is one I constantly tell people in my practice is, they think they like to get that big tax refund because then
Mhm.
that's found money. They can go out and can pay for their vacation
Yeah.
or some toy or whatever it is. And I'm like, you're giving the government an interest-free loan. And wouldn't you rather have that money in your pocket every pay period
Mhm.
and a big refund that you might get later, right?
Yeah. No, and I remember when I first started working, and I remember getting a big tax refund. And yeah, I did not come from wealth, so I will explain that most of the.
Neither did
And I
I.
was so excited to get like a couple $1,000s, that first tax refund, and I probably blew it on like clothes or a trip or something. Um, but I didn't really understand, and I think a lot of people do say like, "Oh no, over withhold, I like getting that big check." That in Because they think of that being the only way that they can get like a substantial amount of money at one time, because they're not maybe used to saving on a regular basis
Mm.
where that could add up. I do think this might be shifting though a little bit when people do think about giving the government an interest-free loan, like you said, especially when certain things like cash have been earning 4 or 5% or more sitting in a high yield savings account or in a CD. So I think a lot of people are now like, well, I think I'd rather have that and then just remember to deal with the tax bill. It's one of those things that's not really a surprise. But when people do get hit with taxes that they need to pay. It does feel painful to write that check. But I do think if you try to, working with an accountant or working, to try to withhold just as much and get as close as you can to even, I think that's the best way to make sure that you get more in your pocket year round
Yeah.
and that you're not missing out necessarily on something that's not exactly a windfall after all.
And also, if you're getting it in your paycheck as opposed to a refund, I would think you're more likely to spend it responsibly because it's part of that household income. It could go to
Yep.
pay certain bills. Whereas you get this refund, it's like, oh, let's go out and buy a
Right.
treat or go on
Yeah.
vacation or things like that. And you're kind of encouraged not to spend that money responsibly, right?
Yeah, no, I agree. And I think that that would be something that maybe instead of doing it that way, where you could set up your own vacation savings account or something like that. And then once you get to that point where you could do those things, that it doesn't, you don't necessarily have to rely on a big refund to do it. You can fund it yourself by getting more coming out into your paycheck for sure.
Mhm. And the next one is something that in my law practice too, I deal with this idea when I'll say, well, do you have an estate plan?
Mm,
And they'll look at me and say, what? You know? And I say, I've gone from saying, do you have a will? Do you have an estate plan? Because I don't want to reinforce this idea that you just need a will. That's
yeah.
not the only document you need. And when you call it an estate plan, you have
Mhm.
this bigger picture. It's broader and a lot more descriptive. But this idea that trusts and estate plans are only for the rich, only
Yeah,
rich people need them. And that's kind of a myth too, right? And that holds
absolutely.
people back from having the estate plan they need. Would you
Oh
agree?
yeah, I see this sometimes, and I think, unfortunately, it's the people that I work with that are on the other end of it, where they have to be an executor. They have to figure out what their parents would have wanted. They have to unwind these things. Where if you do some of this planning ahead of time, as far as wills, trusts, power of attorney, all of these things, I think that it's not exactly, it's not for you. It's for that other person that's going to have to figure things out. But I do have a lot of people, and especially in Massachusetts, where we have a state tax limit, I think there's $1 million. Like we have very low state limits. And so a lot of people don't realize that even if you have a home or a business, um, or investments, you might be over
Yeah.
that account pretty easily. Depending on, how long you've been working and things like that. And so I think that and people also when they have kids that go off to college and they don't realize that those are now 18-year-old adults where you can't just see their grades. You can't just make medical decisions. Like all of these things that happen that people don't understand are a whole part of that estate planning process
Right.
where it can cost money if these things aren't done, where you're going through a program, you're taking longer to get things done, or you're having to miss work to, go to the courts and file things. So I think that estate planning is really, it's so important for all adults. And even with COVID, we've seen people who've been temporarily unable to speak for themselves when it comes to medical care and things like that. So a lot of times being able to just step in, pay a bill for your spouse or do anything like people don't realize that they can't just do that if it's not their account. So estate planning, I think, is so important for people to take care of.
People think that estate plan is really for when you die, and all sorts of things can happen during
Right.
your lifetime. What
Yeah.
if you're in an accident and you can't speak for
Mhm.
yourself? So who makes the medical decisions? You can't speak for yourself in the hospital. So who pays
Yeah.
the bills? You're in the hospital for weeks. Who takes care of the children?
Yeah.
You may have a guardian named in your will, but if you're incapacitated, you and your spouse, and there's nobody to care for the children, what happens?
Yeah.
So there's
Hmm.
so many things that can go wrong and that people aren't planning for
Hmm.
because they had this idea that estate plans are for the rich and they're real expensive and everything else.
Hmm.
They end up missing out on that.
Yeah. And I was talking to some people like now's a big open enrollment time for people at work. And we'll look to, is there a legal benefit? Maybe there's a way that you can take care of some of these, estate planning, like living documents and things like that. That's not, and sometimes people overestimate how much they think it costs
Mhm.
without really knowing because they assume it's for the ultra wealthy. And it could be a few hundred, maybe a few $1,000s to get these things taken care of.
Mhm.
And then I don't know anybody that feels worse after it's all taken care of. It might be something that's tough to think about, but once it's done, I think most people, especially parents, especially if there's guardianship or anything like that involved, um, it's definitely the right choice, and it's definitely a good investment to make.
And oftentimes you want to make it, have your estate plan one that is easy to administer. You don't want to make more work
Yeah.
for your children, who are
Mhm.
often the ones that are the executors of the estate and taking care of things. I mean, for example, and this happens a lot, you have people, they live in Philadelphia or the Philadelphia suburbs, but they own a vacation home at the Jersey Shore.
Yeah.
Now, with a will, you would have to probate that will in Pennsylvania and New
Mhm.
Jersey to address that real estate in both places. But if they were in a trust, then you don't have to do that. The trust owns it, and they would just sell that asset, which is
Yeah.
a heck of a lot simpler and less expensive. You're not hiring probate attorneys in two different states just to sell those two pieces of real estate.
Yeah, no, it's definitely that's something that people need to think about. And also, like you said, with the people who are dealing with it, the loved ones, like they're actually also under stress because because something has happened to you, and then they don't get more capability, more brain power, more money to handle these things now. They just have to work with what they've got. So anything you can do to make things simpler, more cost efficient if something was to happen, I think is such a gift that you can give to the people who care about you.
Absolutely. And talking about expenses that are well worth it. Uh, let's talk about financial advisors. You're a
Yeah.
certified financial planner.
Hmm.
I'm sure you run into this myth all the time. Oh, I don't need a financial
Yeah.
advisor. I'll just put some money in some index funds or
Hmm.
in CDs or whatever
Yeah.
it is, and they're just gonna rack up the fees and take advantage of me or won't give me. They're just not worth it for what the services that they provide.
Yeah.
So, what can you tell the folks out there about why a financial advisor is someone you should at least talk to,
Yeah.
if not hire?
This is definitely a myth that I hear, and some people will talk to me about it. But a lot of times, just like anything you might outsource, there's certain things that I'm capable of doing. I'm capable of learning. I just don't have the time or the interest, and I don't want to. And then I'll talk to some people who maybe start on the right path. Maybe they open that Roth IRA and they put money in it, but they don't understand that that's not the investment that now, and I've seen that where years later we're looking at the stuff and like that IRA has been sitting in cash, where the whole point of it is to be earning that tax free money if it's invested and used in retirement. So there's a lot of things that a lot of times where I think that just about anybody could benefit from talking to a financial planner who has their best interests in mind, about what they can do to either optimize their financial or what they've already got going on, or maybe suggest some things to them that they might have available. Like I work with a lot of small business owners that don't understand some of the retirement plans that they have available to them based on how they've incorporated or what they do for work. And so we look at other things like insurance, taxes. I don't sell insurance and I don't do taxes, but I can identify some of those gaps that might be a very big financial problem if they're not addressed. And also helping with the investments, like you said, you could do an index fund. You can do, those are all things that are definitely available and people have made a lot of money. It's just a matter of like, is that fit your risk tolerance? Are you going to be able to see this? And a lot of times, what I'm doing that can add the most value is stopping people. And I have one client, I have, a person in my head that's very, very smart, knows exactly, like, very smart attorney. And as soon as the market gets a little volatile, he wants to go straight to cash. And so very much on the mindset of like, I can't watch it go down. I can't see it. And that can cost so much, where especially, sometimes that feeling that you have to take action, it can be now he'll just talk to me. And then sometimes by the end of the week, it's back up to where it was. But it's really hard to know when to go out and when to go back in for some investors that maybe can't just sit and watch or sit and ignore it and be patient for, decades and build wealth. So I think there's a lot of things that financial planners do that people don't realize. And I've talked to people that have a lot of debt that still wanted a financial plan to see, once, because they were working at a law firm, they had very expensive education. But we could see once we got to year 6, things started to look a lot better, like once the payments, and so you could kind of look further into the future about like, okay, all this hard work I'm doing now where I'm here, what is that going to mean 2 years, 10 years, 20 years down the road? So it kind of can encourage people to keep up the hard work
Mhm.
that it feels like you're doing, because we can, use reporting, use tools to kind of look a lot further out than what you're seeing right in front of you with your checking account and bank statement right now.
If for no other reason than, have a financial planner to calm you down when the market goes down, because people they panic, they don't realize you haven't actually lost any money.
Right.
You haven't sold it.
Sold
And
it.
and as I understand it, the market usually has a recovery, even to higher heights than where it was before the fall,
Yeah.
if you just wait long enough.
Yeah.
And
And I've
even,
seen people who got out in like 2009, but it's like, when do you get back in? And a lot of people don't really know that because they're waiting for things to calm down, but we actually don't live in a world that calms down.
well,
There's
no,
always going to be an
you not
election.
only
There's
don't
always
get,
going to be a war somewhere. There's always going to be something going on. There's a 24-hour news cycle. It's never going to feel quite like the right time. And so I think that it's so challenging for people to decide that on their own and feel like they're making the right decision. So a lot of times they do. They just keep it in a savings account or where they can see it, which can mean missing out on years worth of gains.
and not only that, but even if they don't take their money out and they ride it out,
Yeah.
another mistake is just waiting until the market comes back up again instead of doubling down and putting even more money in,
Yeah.
because you buy it when it's you keep buying, it's now low, it's now cheap. When the market recovers, you can see huge gains
Hmm.
in your investments, that, if you just did nothing and it comes back up, well, it's where it was a few months ago or a year ago when it went down. But if you
Yeah.
keep investing and putting money into the market, you won't lose any time. In fact, you'll have bigger returns on investment because in the rebound.
Yeah, no, it's the only thing that I talk to some people, and it seems like the only thing that we don't want to buy when it's on sale. Everything else, we're like, yes, this is exactly what we want to do. No, we don't want to buy when it's the most expensive, but with investments and things like that, with flips, nope, everybody's up here, so that's what I want to do. I mean, you could kind of see once people start to understand it, and maybe they're working with a financial advisor, and they still might not be the ones like placing the trades or things like that. But when they call me and say, should we be buying more today? I know that they've gotten it. They've figured it out that yes, like this isn't when we panic. This is maybe when we start to look for different opportunities. And that's always an exciting thing for me to hear.
Absolutely. All right. So if anybody wants to reach out to you and say, "Hey, Misty, I need to demystify my money and see what I should be doing for financial freedom and financial independence now and down the road," how can people reach out to you, and how can you help them?
Sure. Well, I do. I would love to help them. You can head over to mistylynch.com. That might be the easiest way. You can, order the book. You can listen to episodes of the podcast, or you can go directly from there over to Soundview Financial Advisors, which is where you could book a call with me and we could talk about financial planning, investment management, any of those services that you might need. I think that, you could also follow me on social media. I put out tips every Tuesday. I am Misty Lynch CFP on uh, Facebook, Instagram, X, LinkedIn, and yeah, I'd love to have you visit me over there, and if you're just interested in some more financial content.
Okay, well, great. So I'll have all that in the show notes for folks to check out after you listen to the episode. So thanks for coming on the show, Mystery. uh, Getting lots of great information about demystifying money, and appreciate having you on the show.
Thank you for having me.